The host of Wall Street Week, David Westin, joining us as he does every day at this time. And David, there's been a lot of talk, of course, about climate change and sort of all the initiatives out there to try to address this. And I think any company that would sort of be right in the center, the epicenter of that, would be one that makes engines.
Exactly right. Yeah. Cummins makes a lot of diesel-powered engines, and that transition is a tricky thing for them. We got to sit and talk, actually, with the CEO. She's Jennifer Rumsey out in Indiana. They're based in Indiana, but they really are global. Yeah. They got exposure in China, Europe, everywhere else. So we started out by asking her, what is the demand for her product? What does she see coming down the road? This is Jennifer Rumsey.
Cummins is a global company. We serve commercial and industrial equipment around the world, the largest provider today of engine-based solutions into those applications. And we just came off of a record revenue first quarter. So we continue to see strong demand across many of our markets around the world: commercial trucks, power generation, mining, construction. Many of our markets around the world have been very strong for the last couple of years, and in fact, supply constrained. And that is in part contributing to why we continue to see such strong demand, even with some of the softening broader economic indicators, because our customers use that equipment at a very high level over the last 2 to 3 years. We weren't able to supply to meet all of their needs, and so we continue to ramp up capacity in our plants and work to meet those global needs. The market for us globally that has been slightly down has really been the China market, and we're seeing some improvement in China today, although still at a pretty low level.
Well, I wondered about that, particularly because I've seen, for example, some projections that diesel fuel sales may be dropping to low levels in China. What determines your pipeline? Is it expectations of your customers for future need for shipping?
So our customers today are still heavily demanding diesel-based solutions, but Cummins is focused on decarbonizing our industry and being a part of solving the challenge that our planet faces with global warming. Our strategy, we call Destination Zero, is focused on doing just that, continue to meet our customer demands today while we reduce CO2 from engine-based solutions, and that's largely what we're selling today. We're projecting in the range of $32 million of revenue for Cummins overall in 2023. Accelera, the business in Cummins that is focused on zero emissions alternative solutions, will be only $350 to $400 million of revenue. So largely diesel-based solutions today, which is why we're focused on moving those solutions towards low and zero carbon fuels, while also accelerating the adoption of these alternative solutions. And that strategy for Cummins we call Destination Zero. It's a growth opportunity for us, enables our customers to make this transition, and also is good for the environment.
Do your customers have the wherewithal to make the investment required? Because presumably a lot of them have fleets out there already. They've already invested in a fleet. To make the transition, there's got to be a lot of capital investment.
Well, there's a couple of important things to understand about our customer applications. First, there's no one solution that will meet all of their needs. They're used in very different ways. If you think about a transit or a school bus application compared to a long-haul truck, compared to a mining truck or a generator, right? A range of different solutions will be required. The common theme for many of them, though, is that they're running businesses. They're counting on the power solutions that we provide to meet their business needs day to day. So economic factors are a big part of their buying decisions. And that's why advancing these solutions in a way that helps to scale up the technology, bring down cost, and build an infrastructure out to support them is really critically important. And it won't happen without the right regulations and incentives that help in these early days to drive adoption and the infrastructure to build out. So that's really key. Many of them, today are just focused on running their business and ensuring their business is successful.
You mentioned the right regulations and incentives. We have seen a fair amount come out in the last couple of years from Washington Inflation Reduction Act, the CHIPS and Science Act, various efforts, including, let's not forget, the Infrastructure Act. At this point, do you think we're on the right track in terms of the incentives and regulations you refer to?
I think the U.S. is making steps in the right direction. We have been pleased to see many of the provisions that we thought were important for this energy transition to be passed in the last 18 months. The bipartisan infrastructure bill, the Inflation Reduction Act, energy provisions are the right steps to help start to build out infrastructure and drive adoption. As a result of that, we announced an investment in our existing plant in Fridley, Minnesota, to assemble electrolyzers that will be used in green hydrogen production. So you're seeing more investment being made in these alternate technologies and infrastructure. We still have a long ways to go. It's going to take time. And so it's early days, and these are kind of some of the early steps that will be necessary.
Do you have any sense of how long a time period that is? Are we talking about 5 years, 10 years, a generation? What do you expect?
So Destination Zero, our strategy to decarbonize, is aligned with the Paris Climate Agreement, has us getting to zero by 2050. That's a long ways out, of course. So this is why this dual path approach that Cummins has that focuses on improving engine-based solutions first, because certainly in the next decade and even beyond, these transitional and bridge solutions will be an important part of reducing CO2 emissions and starting to address climate change as this infrastructure builds out and allows us to move to true zero emissions-based solutions. You know, our customers' equipment is on the road for many, many years and decades. And so we can't wait to start solving the challenge. And we also need to do it in a way that makes sense for the economy and makes sense for their businesses.
Just to bring this to conclusion, let me come back to the here and now and talk about two things that we talk about a lot, which is inflation and pricing power. What are you seeing in terms of inflation and supply chain right now for Cummins?
You know, inflation has been a big challenge, of course, for us, as it has been for many over the last several years. Well, we have seen some improvement in some areas. For example, freight rates and cost of shipping. We continue to face inflationary pressure. We've had to do a lot of work on pricing, including in some of our long-term agreements, to offset that inflationary pressure. So a little bit like my comments earlier around supply chain and some of the supply chain challenges, we've seen stabilization and improvement in some areas, and yet we're still experiencing issues. And so while business demand is good today, and my team is really focused on meeting our customers' needs over the coming months, we're also paying attention to the longer term and prepared to adjust our business in response to what happens with the broader economy.